Becky, so I'm looking at your predictions here. Tell us why you think we'll get a deeper cut on the 5 compared to the 1, but you do expect, of course, both to be reduced.
Thanks. So we are now looking for an asymmetric cut of the LPR rate today for 5 basis points for the 1 year and 15 basis points for the 5 year. So the major reason that we're looking for a deeper cut on the backhand of the curve is because we believe that there is more need to support the real estate sector. More importantly, the most important drag to the current still relatively weak credit growth comes from the housing sector. Particularly, mortgage rate growth has already decelerated to 0%, and the more recent data are indicating that mortgage loan growth might dip to even negative territory in the next few months.
That's not good. And inflation's almost at 0 too. So real rates are much higher than most people appreciate. How much lower do you think rates can get across that alphabet soup of interest rates in China towards the second half of this year?
We do see more room for both rate cut and AAA cut. So as you rightly pointed out, China's real rate is now too high, either by global standard compared with other peers or by its own historical standard. So if we look at the CPI inflation, it's already near 0. And in the coming few months, we think CPI inflation in China will likely to dip into the negative territory because your rent prices are still declining and food prices also staying relatively weak. So we are looking for CPI inflation probably dipping into the negative territory of somewhere between 0.2%, 0.3%, minus 0.2%, 0.3%, and PPI inflation staying negative throughout the entire 2023. So that is a reflection of a slower recovery of demand compared with supply, and also to some extent overcapacity in the manufacturing sector. So from this perspective, PBOC will need to cut rates further, but what we will likely to see is that they will have to cut rates in a symmetric way, i.e. that for any future MLF rate cut, they have to be accompanied with deposit rate cut in order to reduce the extent of margin squeezing of the banking sector.
That big drag on credit growth and consumption and loan demand also comes from households, right? So to that end, do you think there is a need for a sizable stimulus package? And what would be a most productive stimulus package for you?
So as we have been seeing, the traditional stimulus measures or traditional monetary policy easing, it's already seeing some decreasing incremental benefit. So on one hand, we do believe that monetary policy have to stay easy in order to support a better recovery of the economy. But on the other hand, fiscal policy will likely to be more effective, including the likes of consumption coupon. But more importantly is to boost domestic consumption through the boost of private sector investment, which will create more jobs and in turn come up with a better confidence and more sustainable consumption outlook in China. So at this stage, we believe that a hugely sizable stimulus package probably would be still a bit ahead of us. But we are closely watching for the July Politburo Committee meeting in order to look for the direction for the second half. In the meantime, we look for the possibility for further relaxation in the real estate sector, selected industrial sector to support more of the domestic consumption as well as high-tech manufacturing. And from the consumption perspective, we still do not rule out the possibility for a broadly used consumption coupon at this stage.